Got a great panel for you guys today with three Netherlands natives. We're going to be kind of going off of Mark's talk a little bit, talking about some macroeconomics. Before we begin, I'll let you guys introduce yourselves, who you are, what you do, and then we'll dig in. You want to start it off?
Yeah, sure. My name is Jeroen Blokland. I'm a long-term multi-asset investor, as they're called. I used to work at one of the biggest independent asset managers in the Netherlands, Robeco. I quit and I started my own company called True Insights, which is an investment research company. But I'm returning as a full-time investor because I will be launching a new smart multi-asset fund that includes Bitcoin, by the way.
Love it.
I'm Paul Buitink and I'm a director and one of the co-owners of Holland Gold. We are a bullion dealer, so we sell and store gold and silver. And I also run a podcast with our company, and perhaps some of you guys know the podcast. We interview on a weekly basis in Dutch, unfortunately for you, Dylan, but we interview experts in Holland and Belgium about the financial system. For example, this week I spoke to the former president of the Dutch Central Bank, Nout Welling, to talk about interest rates, inflation, and where the system is going to. And also one more thing, we also organize events. Next week, Friday, we have our own event. If you guys haven't yet bought a ticket and you're Dutch, check out hollandgold.nl/evenement 2023. And if you use the coupon code BTC Amsterdam, you'll get a €10 discount.
All right, well, my name is Michaël from the Poppe. And you can probably know me by the nickname Crypto Michaël. Doing a lot of things on social media, mostly focused on trading and investing in Bitcoin and crypto. And that's why we're going to launch our own consultancy in asset management in the next few weeks.
Sweet. All right, so let's break it down. How did we get here? 2022 historic year, stocks, bonds, both draw down 20%. We have record inflation not seen since the 70s. The Eurozone in particular, with the Ukraine-Russia conflict, has an energy crisis. We now have another conflict in the Middle East. Like geopolitically, it feels like we're at an inflection point, or maybe already past the inflection point of 40 years of extremely calm, and, a unipolar world order of sorts. Stocks, bonds, have this inverse correlation. We go, 15% rates to zero over 40 years. That world, if not dead, it looks to be, radically changed. How do you think about the world going forward? The past couple of years. How does maybe Bitcoin play into this? If you want to get into that, just broad thoughts. If you want to start it off.
Yeah, so I'm from a traditional investment background. And the thing that I worry about, or a couple of things, is, of course, what also the previous speaker already mentioned, is the incredibly amount of debt, which has been accumulated in a period of, let's say, 40 years of ever declining bond yields. So creating debt was very cheap, and the question is if this remains. I think it will, because there is no way out. You have to have low yields. And also likely because of many factors, but also deglobalization, central banks, debt sustainability, I think inflation will be higher. So you have this combination of low or negative real yields and higher inflation, and that even without having to expect the end of the world or the financial system as it is, it will push investors up the risk scale. And what I find interesting, if you do that, if you follow that story, then in the end you will have to make a decision: will I continue investing only in inside money? It was in the previous, it was inside money or traditional asset classes like bonds or equities, or do I also start to look at other asset classes outside the traditional system? So this is where I am as a traditional investor. I think if you look at the odds of very low or negative yields and higher inflation, it pushes you outside the current financial system. I don't think you should go out of the financial system entirely, but I think you should mix things up. So as your odds about the future change, you should adjust your portfolio. And this is also why I invest in gold and Bitcoin on top of the regular asset classes like equities.
And in general, I would say spread and diversify, but currently looking at stock markets, for me, it doesn't make any sense to, in general, be long stocks at the moment. Of course, the recession that everyone predicted is still not there. It usually takes a bit longer after we have a yield curve inversion before you actually get to the recession. But I would say, and a lot of people think that as well, that next year we would see a recession. And we probably see also a pivot from stocks back to bonds, because bonds look really cheap currently. Because over the past few weeks we saw bond markets crash and yields are going up a lot. But of course, then the question is, do you want to own bonds? Because there's a sovereign risk as well. But if you want to spread your portfolio, I would currently stay out of stocks and maybe switch a bit to bonds. But in general, also own things outside of the system, just like Jeroen is saying as well. And if you look at outside money, then for me also the combination of Bitcoin as the new world, something positive to look forward to, new digital worldwide money in combination with money of the kings, something that has 6,000 years of history, gold, gives me the most comfort at night at least.
Love it.
Well, I think overall Bitcoin should be behaving a little bit like gold. That's why I'm favoring having a portfolio of cash, commodities and crypto, especially with the high debt that we have, the high yields that we have, the high inflation that we currently have. I think having a basket of these three assets are definitely a way to go. I'm not investing into stock markets at this point, the real estate the exact same. Anyway, if you look at the markets at this point for Bitcoin, I think in the macroeconomic playing field, some periods we see a correlation between the assets, but Bitcoin is still a speculative asset, which means that there are no financial instruments for institutional investors to allocate towards Bitcoin, because if you have a few billion to allocate towards Bitcoin, preferably you want to have a liquid asset like an ETF instead of having the actual asset itself. That's why you see that gold is moving stronger right now and Bitcoin is still lagging behind. So I think if with MiCAR and if with the entire regulatory framework being built, it will open for the institutional investors and the allocations will be going towards Bitcoin.
Love it. Yeah, I think there's, when you think about the current environment with, 30-year yields, like long bonds, being, 50% down from the highs, like an unprecedented move in, quote-unquote, what was referred to as the risk-free asset, whether it's 10-year or whatever. But when you think about, okay, hey, maybe bonds are a great investment here, I think it's important to distinguish between a trade, whereas, if you buy a 30-year bond and next year yields drop by 1% or 2%, you make a bunch of money, versus, hey, do I want to lend the European, a country in the European Union or the, Japan or United States money denominated in fiat currency for the next 30 years?
Yeah, exactly. Like, for example, IMF is even saying this week that the US is on an unsustainable fiscal path. And just like Mark also showed in the previous slides, it's just in the long run, it's a Ponzi and it's not sustainable. But indeed, tactically, in the short term, you could make some money by trading bonds. But it's also what kind of signal do you want to give? Like, the more you invest outside of the system in alternative assets, the less support you give, of course, to a system where you disagree with.
Yeah, we were talking about it earlier. We were mentioning the fiscal, crisis. You could call it a crisis, but with the debt burdens where they are, in tandem with the record spike in interest rates, it puts the fiscal authority in the U.S. and the European Union everywhere, like this global debt Ponzi that was financed by ever lower yields, is unsustainable. And so in the past, if you think about the 20th century playbook, it was to confiscate gold. Like, we go to war, confiscate gold, devalue it, right? Or Nixon says, hey, sorry, we're just taking your gold, we're not redeeming you. But with a fiat debt-based currency, that's not, they're not going to not pay the debt. It's just they're going to pay it it's like an implicit default. It's not an explicit default, right? So I think, how do you think about the fiscal, right? Like, we've added $2 trillion of debt in the United States. I know we're in Europe, but I say U.S. is like a proxy for the Western world.
Italy.
Yeah, in Europe it's the pigs, right? Portugal, Italy, Greece, and Spain. The demographics and the debt, it's unfixable, at least from my view.
Well, yeah, in the end it's unsustainable. I think that's the word. But what I find interesting now is that you have these traditional investors and economists that believe, because of what we have just witnessed in terms of inflation and debt, that global bond yields must remain high, hence remain an attractive asset class. I think the only way out is to keep interest rates extremely low, and that indeed means that for a couple of years you can make 50% return on long-term, long-maturity bonds, but then it ends. So in my strong view is that interest rates are a very easy way to sustain debt sustainability, whereas austerity is not. So, and that is also what you see in the chart of the Congressional Budget Office and others. So the US is on a path for 7 to 8% budget deficit, including interest payments of 5% of deficit. That also means when the next crisis comes, will there be fiscal stimulus? So I think it's, if you do not stimulate, you're gone. So the next election, you are gone. So they won't prevent that from happening. And then everybody starts to look at central banks again. Please lower these interest rates. So this is the dynamic I expect it to governments and central banks to kick the can down the road, especially because interest rates are high now, and we can do this another round for let's 5 years or 10 years. But then you end up in the same situations. And at one point, and I was told that this is roughly at 80 years, but it could take a little bit longer than it's done. Then we have to try something else.
Yeah, and I think we'll also probably see a period of financial repression where they are going to suppress the yields like they do in Japan or like they've done in the US in the 40s, because we are currently in the age of conflict. It seems like every month a new conflict, unfortunately, is added to the mix. And so also Western economies, they need to start having a war economy, top down, where you also, as a government, you want to raise funds, but you want to also make sure the yields are suppressed. And so I think we'll lose financial freedom even more than we've done so far. And in Holland, for example, there are actually laws also that allow the government to confiscate. It's called the emergency law financial system from, for example, 1978. I think once the shit really hits the fan also in Western Europe and we really need a war economy, for example, I would expect governments to start confiscating things as well. And they will start with the easy things. So let's say bank accounts, stock accounts, cryptocurrencies. That exchange is not something you have in your own wallet, of course. But I think you have to look at these things as well at some point. I hope not, but I wouldn't be surprised if we would move into that direction as well.
Do you have any thoughts on this, Michael?
I mean, I don't think there's a way out, to be fair. I think this system has started in the 1970s, 1980s, and we had 2008. Now we're facing the exact same problems as we had back in that day. Debt is going through the roof. The wealth gap is also one of the largest that we have right now. So if the yields are going to stay high and inflation stays high, we get a copy of the 1970s, which means that you're better off by having assets outside of the entire financial system, which means gold or which means Bitcoin. If we face a crisis, then we're probably going to face something like the 1930s, which is going to be destructive, including wars. And what did go well during that period? Gold. However, right now we've got a similar situation in which people start to opt out of the system, which is Bitcoin. So I think there's no way out of this system, and preferably if you are an investor, I think you should be allocating towards gold and Bitcoin. And I think, to be fair, that Bitcoin is the way out.
Yeah, I would caveat that one thing there. It's that gold did well in the 1930s after they confiscated it all from the citizens at gunpoint.
Correct.
So
that's the difference.
So make sure to hold your own gold or Bitcoin, because how I view it is like in a financial repression world, right? In the 1940s playbook, where there's a war, they keep inflation, or they keep the interest rates artificially low, inflation rips. The savers and the lenders, the creditors of that holding the sovereign debt lose. They lose everything, and so. How do they prevent that, or how do they subsidize that? Well, they kind of like have to board up the walls, right? They kind of like have to. I mean, maybe it looks like maybe not in the U.S., maybe not in the Western nations, but they maybe try to limit the off ramps or limit the flow into something like gold or Bitcoin, because any rational actor is looking at this and saying, wait a sec, like why would I lend to the government at 3% when inflation's 7%? It makes no sense.
Yeah, and we've seen how easy governments were able during the COVID period to infringe on people's individual liberties, and how easy it was also for people to, like, people sort of relatively easily accepted all of that because of a virus. But can you imagine if there's a war even within our own borders of Europe, and things get tougher? I think a lot of people are willing to say, okay, here are my keys, this is my bank account, do what you want. I wouldn't be surprised at all.
Yeah, no, that makes sense. And I think that's something to think about too, is, and not to get like all geopolitical, but the unipolar world order to like essentially a multipolar world order, or maybe not like an absolute shift, but just a relative shift in that power dynamic, is something that, you know, no one that's been investing, no one that's alive has really faced in the investing world. Is, I think, the de-dollarization, and correct, you know, I would love to hear everyone's opinion on this, but the de-dollarization narrative is a little bit overblown because there's not really a fiat currency that's going to overtake it. I think the de-dollarization case is like an alternative asset case, right? Like the euro has the same problems as the dollar. The yen has the same problems, the yuan. It's not like they're all in the same boat. It's more so like, okay, maybe we look at some other form of money, outside money. Do you guys agree? Or is the BRICS currency that's talked about the next new thing?
Yeah, well, it doesn't seem like the BRICS currency is getting anywhere at the moment. So I think it's, like you said, that story is probably oversold. For now, the dollar is still king. If you look at all the metrics, apart from percentage of central banks that keep the dollar as a reserve asset, that has been going down over the past 10, 20 years to now like 60%. But the euro is a very bad alternative because the euro has even bigger problems than the dollar. I'm more bullish on the dollar than the euro, given all the, especially now with the rates going up, and Italy has, of course, severe problems with the high interest rates. And the ECB cannot easily start buying up these bonds again because they have all these lawsuits in Germany that at some point are going to prevent the ECB from buying more of those bonds. I think that will be a big problem over the coming few years, because the Germans are done with the fact that the ECB is basically costing them a lot of money. So the euro is not an alternative, and then the individual BRICS currencies are also, I mean, China doesn't have open capital markets, so there's no real fiat alternative to the dollar. So then you have to look at outside money, like we've mentioned before, but of course it's more difficult to use in global commerce.
You have any thoughts on this?
Yeah, so the euro, of course, it's structurally flawed, and in the end you have seen that the policy around it will be focused or centralized around the weakest link. Most of the time that's Italy, and this is also why Germany is fed up with that, because you get this whole north versus south. But in the end, when you want to keep all kinds of different animals in the same boat, then yeah, you have to focus on the weakest, and that is not Germany. So the euro is definitely not an alternative. I think there is no real alternative. Just the liquid market size of the US dollar. So most likely it will become something else. I think that will take time, by the way. Yeah, so I'm not a really de-dollarization, but on the deglobalization, you already see big things happening. And again, the phrase war is often mentioned, but I think it's much easier to say there's a race for technology, for national resources, especially now that we are overdoing this whole sustainability thing. There's a race for all kinds of things that are also scarce, and that immediately means that there will be new bonds, new links, and then you have the emerging markets in China. But I think we will see many more of these local resource hubs or finance hubs. And that also, by definition, means if you believe that globalization has lowered global inflation, then when you see the opposite happening, then we should expect higher inflation. And you don't have to embrace any extreme thoughts. This is just plain economics. So yes, I do think that new finance, national resources hubs will come with geopolitical tensions, and most likely also with war. But I'm someone who, until the Ukraine war, I could not believe, I would not have expected ever that there would be a war so close to my home. So yeah, for me this is already a surprise.
Yeah, Kind of on the topic of like Italy and the strife between the Germans with I forget what it's called. It's an acronym. The kind of the stabilization program that they buy the weakest. The
TPI.
Yeah. Where the Eurozone has like all these different sovereigns, and they have to kind of maintain the spread between these bond yields. And we're already seeing Japan, right? Japan has changed their yield curve control policy. Whereas, quantitative easing, they're buying a fixed amount of debt at any price or any yield. Yield curve control is, we're not letting bond prices fall, or we'll print unlimited amounts of money.
That's interesting. The TPI, that's the Transmission Protection Instrument, or known as to protect Italy, has so far not yet been activated. And it's impossible right now to know under what kind of conditions it will be activated, because the ECB is not transparent about it. We know that in Germany there's already a lawsuit because of the PEPP, the Pandemic Emergency Program, Purchase Program, that is already sort of probably illegal. So TPI is even more vague and not transparent. So I think once they start using TPI, they're going to bump their head legally, and it will probably mean the end of all these purchase programs from the ECB. So then the ECB will lose the tool to start suppressing Italian yields or Spanish, Portuguese yields, whatever, and then you have the market reign. And there's a no bailout clause, of course, in the Euro Treaty. Of course, they wipe their ass with it, but it's still there. So I wonder how the euro will. I wonder how the dynamics will be once the ECB is being shut off of their ability to buy a bond.
Let's figure out the future of the euro in the next 2 minutes and 30 seconds, because they have a lot of structural problems. You guys have any more thoughts on that, like how this all plays out with the strife between the European nations? Like particularly with monetary policy?
No, you get a Greece or an Italy, or you get a populist French president, or so every now and then you get this volatility because the way that we constructed the euro and the eurozone is flawed. So unless you give up everything. And that is also, you should also see now a very big counter movement, also in my country, that we transferred a lot of our responsibilities to Brussels. And this is also something, basically if you want it to work, then this is what you have to do. If you want to remain sovereign, then these two things do not add together. So my idea is that we get every 5 years, 6 years, we get one of these issues, and then at some point, somebody will go out, one country will go out, and then it collapses. And then we all go back to the guilder and things like that.
Yeah, well, the Eurozone needs crises to get strong. Whereas every time there's a crisis, it's being embraced as a way to grow further. And they already knew that when they designed the euro, that they would start with the monetary union, because they knew then the political union had to follow. So it was a bit of a sneaky way in order to sort of get us into this political union. And every time there's a crisis, they will use that as an argument to integrate even more, because we need to fight a virus, there's a war, there's climate. Every time it's used as a way to go even further, even without the consent of the people. And that's what, I mean, I'm not per se against this or that. I just want to, at least for people to be involved in defining their destiny. And that's the nice thing about Bitcoin, of course, is that it gives you full sovereignty of your money, of your future. And if you participate in the euro system, via your pensions or your bank account or whatever, you're completely in the hands of whatever they deem fit in Brussels and Frankfurt. And that's getting scary every day.
Sounds like we need an alternative. It's a good idea. Anyone have any ideas on that one? Well, we're all set for time. Appreciate everyone tuning in. Go Bitcoin.
Welcome back to Bitcoin Amsterdam Live Desk, brought to you by Bitcoin Magazine. I'm joined by Jimmy Song and Tur de Meester. So I heard about Bitcoin and macro, but macro's sounding like it's going by its other name, politics. I heard collapses, financial repression, shit hitting the fan, that kind of stuff. So, macro really becoming more the political scene. What were your takeaways from hearing Bitcoin versus politics in the macro environment?
Yeah, it must be really nice to be a rent seeker in this sort of environment. I love that these guys are like sort of held as the epitome of, fiat like status and stuff like that. And it is exactly what you said. They are playing a political game, and amazingly, they make lots of money doing this. I think I largely agree with their assessment that everything's kind of going to crap. I just don't have that much sympathy for what they do and how little value they add relative to everything that that the economy is going through.
The great Mark Twain had a quote once, which is something along the lines of, people can't tell the difference between good news and bad. They look the same in real time, right? And I heard a lot of bad news, but their responses, solutions to that, exactly from this traditional point of view, was diversify, no way out, but maybe Bitcoin. I think a lot of Bitcoiners are drawn to this idea that there is a clear path to fight against this thing. And when you hear it, when you hear the swamp of politics dragging you down, it's a little harder to see that answer, isn't it?
Yeah, for sure. To me, the main takeaway was that the euro and the European Union is structurally flawed, and that either to maintain the status quo, you need to give more power to Brussels, which is unlikely to happen. And so it's kind of this, they're neither fish nor meat. They're just kind of in the middle somewhere, and that's probably not going to work.
Fish nor meat, okay. Well, we're going to be talking about all of this stuff again when we come back after the following presentation on the future of European Bitcoin exchanges. Over to you.
Thank you, Miami, for the last 3 years in this amazing city. The whole world shut down, but Miami welcomed us with open arms. We want to show Bitcoin to the whole world. We are taking the conference on the road to set the stage for Bitcoin in a new city. Nashville. Bitcoin 2024 is coming to Nashville in Tennessee, a city that is known as a music and freedom city. Bitcoin 2024 in Nashville from July 25th to 27th.